No, I asked Rod what he meant by operator, and it was more basically like the PMC, your property management company, except they're the ones who run the facility.
Yeah,
Um,
definitely. And just like a property manager can definitely make or break you, the senior living operator can definitely make or break a deal.
they're the day-to-day operations. They're the ones who make sure all your residents are being well taken care of. And as the owner, you need to be holding your weekly calls with them, making sure your KPIs are being hit, and holding the operator's feet to the fire when things aren't going the way they need to be, and make sure that they're carrying out the business plan the way it's supposed to be. It's analogous to the property manager. So. Welcome to the Ironclad Underwriting Podcast, where precision meets performance in commercial real estate. I'm your host, Jason Williams, and every week we deep dive into the strategies and systems and stories behind rock-solid underwriting. Whether you're a seasoned analyst, an up-and-coming investor, or a commercial real estate professional looking to sharpen your edge, this show is your front row seat to expert insights, emerging trends, and real-world underwriting tactics that stand the test of time and scrutiny. From market assumptions to debt structuring, cap rates to cash flow, we're cutting through the noise and getting to the numbers that matter. So sharpen your pencils and fire up those models. Let's get to work. This is Ironclad Underwriting. Hey everybody, welcome to this episode of the Ironclad Underwriting Podcast. I'm your host, Jason Williams, and I got my good friend, business partner, co-host, Frank Patalano with me. How you doing, Frank?
Hello, sir. Just another day of trying to make money in real estate.
The endeavor continues, I guess. So last episode, we spoke with your mentor on a topic that I am just really now learning about, and that's senior housing. I think it's fairly fresh to you as well, if I'm not mistaken. And so we've done some research, and we are going to do the best we can to give you guys an opportunity to learn more. Now, granted, we are not experts, and this is really just opening another door to another investment possibility. I have not done senior housing myself yet. I might do it, but I'm just putting that out there that I am not an expert in it, and I am just trying to relay the information to the listeners as best as I can. So, and if you are interested in learning more, I can put in some references and in the show notes on where to find more information. And Rod did say he might be doing a boot camp on it, so that would be super interesting as well. So,
I would say that I have a number of friends in the industry that instead of doing multifamily, they are all in on the senior housing. We had Rod speak first because everybody's connected, and he knows a lot about it. And he's investing in them now. But I definitely have other friends to talk about. Obviously, this is an underwriting podcast per se, so we're learning the best we can so that we can be prepared to underwrite some of these and get better at it.
Yeah, and if you haven't already joined the Academy Presents community, which my wife runs, on the last summit she did in March, she had quite a few assisted living people on it. I think she might have even had a panel on it, so that's a good reference as well. So, you ready to jump in?
Yep, definitely.
All right. So, what is assisted living? Is it just like apartments for old people? No, it's not just apartments for old people. I guess if you think about it like a ladder, the first rung would be like an active adult, where maybe they want to move to a community where other people their age reside and they can do fun things. They have like a calendar of activities they can do. They can go in and out as they want, because it's that basically would be like an apartment for the elderly. But then as you go up a rung, that's when you start getting into different types of care that you might need.
Yeah, so I mean, to start out, people live in their own house. Eventually, we all get older. There's only one way. Everybody's going up in age. So if you don't want to be living by yourself, you start to look at options. So the first one you were saying was like an active adult. They have a full calendar of activities that you can stay. Sometimes it might be an over 55, a 55 plus community. The next level would be independent living, where there's a lot of things going on. You might have housekeeping included. You might have certain meals included, but overall you can leave whenever you want. You can do whatever activities you want. It's independent, So if you want to keep going up those rungs, go ahead.
Yeah, so yeah, with like independent living, I think of it kind of like living in a dorm where you have like your meals. You can go to the meal hall and get your food there at regular times or whatever. You can also do like your dorm activities like bingo and stuff like that, or shuffleboard or really poker or anything, I imagine. But then once you get up another rung, you get into assisted living. This is where you're going to have some skilled nursing care, maybe unskilled nursing, but they're going to help you get dressed. They'll help you maybe bathe if you need it. They'll keep your medications ready for you whenever you need it. This is probably the first level of care where someone moves in because they need to, not because they want to. Not because, oh, I want to go hang out with a bunch of people my age and have everything handed to me. It's like, no, most people don't want that at all. So, but this is where they go for that. So, I think this is really where Rod like started out too, right? With his levels that he was doing. He was talking.
Yeah, he
about
talks a lot about assisted living.
And then memory care after that. And memory care would be the next one. And the memory care one is for the dementia and Alzheimer's patients, the ones who can't just leave when they want because they might not come back. They don't necessarily know where they are. And with memory care, you're looking at 20 to 30% more for the resident. I guess the fee that they pay over assisted living. So,
I mean, there's definitely a lot more staff you need.
yeah.
And then above that would be like the real skilled nursing, almost like 24-hour care.
Yeah, and that's
Though memory care is pretty close.
Yeah, the skilled nursing that would be, I guess, like a nursing home type. And Rod was saying those aren't necessarily always attached to like the assisted living and memory care that he does. That would be like a whole new facility type thing. So, and growing up, I always heard of nursing homes, and that's what that would be. I never really heard of assisted living till I got older.
Okay, I mean, so when we look at senior living, what are some of the important terms that we're always talking about, especially on the real estate side and the underwriting side? I mean, one of them would be occupancy.
Yeah, the occupancy is the percent of units filled. Typically, this industry runs right now about 89 to 90%. But with the baby boomers becoming the people in this, we might get a like an influx of more people coming. Well, Rod was saying that there's a senior housing shortage right now, didn't he? Like,
Yeah.
Like not enough right now. So
I could have swore you used some number like 10,000 a day too.
Yeah, RevPOR, that's a new term for me, but that's revenue per occupied room. And this is like the average monthly check that the resident fills or signs to you based on whatever they have. And Rod was saying, and this might be for the independent or assisted living, where it's like, if you want to do this activity or you want to do this, you need to cut a check for this. It almost sounded like he was nickel and diming people, but it would also give people the a la carte option to.
I like the term a la carte.
Yeah.
On this.
But it's like not everything is included in the same price, is what I was.
Yeah, I mean, so I know examples just when my mom was in rehab and some other things. Obviously, if a guy is bald, he doesn't need to be paying for barber care, but many of the women wanted to get their hair done, and that was an a la carte service.
Manis and petties, and maybe using classes in the like gym or aquatic center or something like that.
Yeah.
NOI and margin. We all know what NOI is, net operating income. That's what's left after you run the building, but before the mortgage is paid. Margin, 25% margin means 25% of every dollar of revenue survives as profit before debt. So margin and NOI are similar. You might hear that term used. Margin, I guess, is more of a percentage base, and NOI is like, this is the number.
Would you consider that number lower than multifamily?
Honestly, right now with my current multifamilies, I would love to have like a 25% margin.
Yeah, but when you underwrite multifamilies, the goal is to have a 50% expense ratio
Right.
or less.
Yeah.
So if a 25% margin sounds smaller, it reminds me a little bit. This in some ways, this reminds me of hotels. In some ways, like even rent poor in the hotel industry, we use the word rent par for based on available rooms.
So it should be less than multifamily, but maybe my experience with multifamily right now, and I am a bit jaded with multifamily right now, just because of an issue that we might bring up in another episode. But
I mean, that's one of the things about why people are transitioning or repositioning into senior living or self-storage is that some people are tired of multifamily, so this is just another option.
yeah, and that is 100%. I mean, the whole reason we're even doing this is because people are moving from multifamily into assisted living. So,
yeah.
Owner versus operator. No, I asked Rod what he meant by operator, and it was more basically like the PMC, your property management company, except they're the ones who run the facility, if I remember correctly.
Yeah, definitely. And just like a property manager can definitely make or break you, the senior living operator can definitely make or break a deal.
They're the day-to-day operations. They're the ones who make sure all your residents are being well taken care of. And as the owner, you need to be holding your weekly calls with them, making sure your KPIs are being hit, and holding the operator's feet to the fire when things aren't going the way they need to be, and make sure that they're carrying out the business plan the way it's supposed to be. So it's analogous to the property manager. So another one is the triple net or NNN. You might see it if it's written, but it's triple net, and that's the lease that's for commercial real estate. And have we ever talked about triple net before?
No, I don't think we've really talked about it here just because we've been doing more multifamily versus commercial retail.
So triple net is like, in general, if you go to like a retail outlet mall or whatever, there's the owner of the property, and then there's the occupant or the tenant inside. So maybe it's like a bike shop or a Dollar Tree or something like that. Those stores are paying triple net leases or have triple net leases, so they're responsible for their own insurance, their own taxes, property taxes, and basically any rehab they want to do other than like the four exterior walls of the roof. Anything like that's structural, the owner's responsible for, but anything inside is on the resident or the tenant. And so with that, you have the same thing with assisted living. If you own a building and then you just lease it out to, say, an assisted living corporation or whatever, then they're responsible for paying all, again, the taxes, insurance, making sure everything is being taken care of the way it needs to. Like if the AC goes out, they're responsible, not the owner type thing. So if the roof collapses, the owner is responsible though. Did I get that more or less correct? I was going off the top of my head. So
Yeah, I mean, triple net involves rent, taxes, insurance, and usually like CAM charges, maintenance, operating expenses, stuff like that.
the reason why, say, an owner or landlord would do triple net is they get predictable rent. It's like 2,500 or whatever. Maybe, and I was just thinking of like a little bike shop that I go to. His rent's like 2,500 a month. It's that regardless of how much money he makes or anything like that. And so the owner gets that, and the owner doesn't have to take care of when the AC breaks or when a window gets broken or anything like that. So minimal upside on the owner, but it's more predictable.
Yeah.
Then RIDEA, or shop. Instead of renting it out, the owner hires a manager and shares in the actual profits of the community. So that's actually making the operator a business partner, which I think would go very well, because then there's an incentive for them to do well versus they're going to get paid regardless of how they perform, which is what we've seen with bad property managers. If they share on the upside, they might care a little bit more. So another thing is, people think of like multifamily, they typically don't think of people like us being able to own them. And it's the same thing with assisted living or senior housing. It's like regular people can own them too. They do it via like a syndication or funds, just the same way. And the returns supposedly are a whole lot better. Like I said, I've not done it myself, so I can't say for certain if they are better. They look better on paper. But when it comes down to it, it's like it all depends on the operator and who's running the show. So
Yeah, it all depends on the operator. So when you think of like a senior living community, anybody can buy one. It's not restricted to hospitals. It's not restricted to doctors. It's not restricted to nurses. But depending on the level, you still need those kind of people working it, being hired to either work for you or to work for the operator in order to manage it. You need someone to deal with medication. You need someone to put, especially with the memory care side, to make sure people are put into beds at night and stuff like that.
yeah, and they probably have need on-site pharmacists, and
I'm sure the bigger ones do.
Yeah, you don't have. It's like with multi or real estate. If you have a property manager, your property manager has to be a broker. At least in Texas, it doesn't mean I have to be a broker. It doesn't mean I have to be a real estate agent. So you don't have to have all of those. You don't have to wear every hat. You just have to have those hats on your team, so that you can. So you will have like higher nursing care, nurses, doctors, pharmacists. And all that. You don't have to do that for yourself. So, and I know, talking with people is like, when I tell them I'm in real estate and they say, "Oh, I'm an agent. Oh, can you help me buy a house?" And it's like, "No, I'm not an agent. I'm not a broker. I'm not anything. I'm just a real estate investor." People don't seem to get their head wrapped around that for some reason. But
definitely, I have that problem all the time too.
So, again, myths that we believed, but hopefully cleared up at least a little bit, is they're not just apartments for old people. The owner just collects the rent. The owner needs to be they need to manage the operator. And memory care is just fancy or assisted living. It's like, no, it also requires more staff per person, more rules, not allowing people to just go in and out like some of the other ones.
No, I mean, even if the economy doesn't do well, even if your finances are not doing well, it's hard to just say, "Oh, you know what, we can't afford mom's dementia care," or it's very hard to bring them into your apartment to live with you. So these are things that even during a recession, people still need.
Yeah. And my understanding is, and when we spoke with Rod, he was of the self-pay variety, where the people had to pay themselves. It wasn't a insurance or Medicare or anything like that, which some facilities do allow for, like Medicare and insurance to pay.
Yep.
But then you have other guidelines you have to follow to make sure you're keeping up with the standards that the insurance company or Medicare, the government, wants you to stand by with. If you're doing like the self-pay, it's less restricted and more flexibility, I think.
Well, I mean, with that, I'm just thinking of regular tenants versus tenants that are paying that are 100% paid by Section 8.
Yeah.
There's private pay, and then there's other types of pay.
If you want to learn more, I'll put some references in the show notes. Maybe I'll link to my wife Angel's summit, where she had a panel of people talking about assisted living, and we'll catch you on the next few episodes where we dive deeper into it. So catch you next time. Bye. And that's a wrap for this episode of the Ironclad Underwriting Podcast. If you got value from today's conversation, Make sure to subscribe, rate, and share the show. And don't forget to connect with us on LinkedIn, YouTube, Facebook, Instagram, or check us out at our website at ironcladunderwriting.com for more insights and updates. If you have a question, a deal you're analyzing, or a topic you want us to tackle, shoot us a message. We'd love to hear from you. Until next time, keep your assumptions grounded, your models sharp, and your underwriting ironclad.